Good morning, good afternoon, everyone. Welcome to our summer edition of ARIVE Partner Spotlight. I want to thank everyone for taking time from their busy schedule to join us today. My name is Harish Tejwani. I'm the CEO of ARIVE. Along with my colleague, Amy Hullett, we will be moderating the session today. Our Independence Day is around the corner, so I hope everyone has made up their plans to celebrate. Today, we are really excited to have with us one of our earliest ARIVE partners, Newrez Wholesale. They've been with ARIVE since its very beginning, from the first versions of ARIVE, and have stayed with us for many, many years. So I want to thank David, Tony, entire Newrez team for their support over so many years. Thank you so much. Newrez Wholesale is known for their product innovation, their commitment to community service, and new advancements in technology. And today, we are bringing a topic which we believe will be very relevant to mortgage brokers, as they just launched a very exciting new product. To take the webinar forward, I'll hand this over to my colleague, Amy Hullett, who will introduce the topic, and then we'll hear from the Newrez panel.
Thanks, Harish. Yes, we are very excited to have a great partner with us today here, Newrez Wholesale. Their leadership and sales team members are here to tell us about a brand new product that they have launched, which is a game changer for those borrowers investing in the short-term rental market explosion that has occurred over the last few years. They will also reveal what the perks are when choosing Newrez, as well as have loan officer Jacqueline Richards speak about her experiences working with Newrez and why she chooses them as a trusted partner. We have Tony Cottonbrock, the president of Wholesale, here to kick this off, and we have a lot of valuable things to cover. So Tony, I'm going to hand this over to you so we can get this started.
Thanks for having us, Harish and Amy. Appreciate the opening. We are excited to be here and talk about our short-term rental product that we just rolled out, which we'll get to in a second. I do want to start off by introducing our team members that are joining us to speak today. And I guess I should start out by saying we appreciate the ARIVE community for having us and for all our business partners out there. So just to introduce the participants, Chris Mazzillo, our vice president over the West Coast, western half of the United States, will join Cecilia Estrada, our business development and non-QM expert in the marketplace, and they'll go into more detail on the short-term rental product. And then, of course, again, Jacqueline Richards, who is a loan officer and a longtime business partner that works for Barrett Financial Group, will add why she does business with Newrez and the expertise that she feels like we bring to the table. So if you want to go on to slide 3. All right, just a little bit about Newrez to open, then I'll turn it over to Chris. We are the second largest non-bank servicer in the United States. We moved up a couple notches there recently with the acquisition of SLS, which was a company based out of Denver, which we brought into the Newrez family. We were the number 5 originator in 2023 overall, which, by the way, for 2023 per IMF, we were the 4th largest wholesaler. We are starting to see some pressure in there and some margin compression with some competitors that are looking towards maybe future value with an improvement in the market. We are looking to continue to grow market share in the wholesale channel and provide value as we move forward to our partners. Next slide. Part of the value that we bring is our financial strength. We now have $727 billion in outstanding servicing combined. We have 3.5 million homeowners that we service, and production in 2023 was almost $37 billion. Again, a big strength, and this is something that we really believe we showed in a very difficult market, especially as we went through a rather large merger over the last couple of years. Pre-tax earnings, $784 million. And then again, with really the SLS acquisition, it gave us a platform of sub-servicing for other mortgage companies, but 502 billion of that is Newrez owned servicing, which makes us a leader in both regards from a servicing perspective. All right, that's a little bit about Newrez. I'll go ahead and turn give the microphone, I guess, even though we are on video, to Chris Mazzillo and to Cecilia.
All right, thank you, Tony. Appreciate it. Really, Tony was just laying the foundation there as far as who Newrez is. We're going to talk very specifically about a particular non-QM product, and Tony, we're going to kind of, I guess, take it down from a high level and then take it down to a very granular level with the product. But Newrez does just about anything, in regards to, or everything in regards to loan products, where, majority of what we do is our agency products. That's the majority of the market, but we are doing a lot of non-QM products. And so, a lot of lenders do non-QM, right? Not just Newrez. You probably had on this ARIVE Partner Spotlight other non-QM lenders. There's probably some that sell their non-QM products to Newrez. But one of the things that makes us special, we can advance the slide here, that makes us different, or why Newrez, is the fact that we are not just the lender, we are the investor through our parent company, Rhythm Capital, that owns Newrez and is the securitizer of these products. And we also maintain the servicing rights for our non-QM products, which is really important. And as originators and brokers, I think it is something that should be considered as, okay, who's going to end up servicing this loan, right? Somebody's got to service it. Somebody's got to collect these payments from the borrower. So it should matter who ends up servicing. And in fact, we'll talk a little bit later in this presentation with Jacqueline about, why it matters who services the loans, and how that partnership goes beyond just the closing of the loan. As far as our non-QM products, again, I said I will start at a kind of a higher level and work our way down. We call our non-QM products our SMART series, right? So you see at the title there, SMART is simpler, right? It just kind of helps us organize these loan products. And you can see, the first one there is our full doc product. We call it Smart Edge. Think of it as kind of on the edge of conventional or jumbo financing. And that's full doc. And there's lots of reasons why a full doc loan might be non-QM. It could be a non-warrantable condo. It could be actually asset depletion, which you actually also see on that slide as well. It could be a number of reasons why it just doesn't quite fit into that conventional or jumbo box. Then, of course, our Smart Self, which is our most popular product. That's our bank statement for income calculation for self-employed borrowers. We could also do a 1099 for those 1099 type borrowers. And then the final category of products we have is what we call Smart Vest for investment. And that is our DSCR product. And we're going to talk more specifically about a subset of our DSCR product, which is short-term rentals. And the reason why this has come up, we've seen just the last few years an explosion in the amount of short-term rentals out there with Airbnb and VRBO and Mikasa, and there's others as well, but those are the most popular. And in trying to get some of those done, there's been challenges in the past in trying to get, let's say, the appraiser to do a 1007 to show the income needed on a short-term rental to make that work. And so we're going to have, let's advance the slide, and we're going to have Cecilia Estrada. And Cecilia is our product expert for our non-QM. She is a really valuable resource for us. She lives and breathes our non-QM products and has been instrumental in us rolling out a product that really works for short-term rentals. And I think opens up a whole nother category of opportunity for loan originators to dive into, especially, right? It's been the last couple of years have been more challenging in trying to find new ways to grow your business. And so short-term rentals it can be a great way to tap into just another fish in another pond with opportunities to grow your origination. So Cecilia, I will pass it over to you and talk about why short-term rentals are such a big deal these days.
Thank you very much, Chris. And yes, we decided to expand our DSCR products because we did notice that many of our borrowers, many of our brokers were asking specifically for rents that are going to be higher, for rents that are going to be giving the borrowers so much more revenue. And how can we give that information to our borrowers? So we searched for something, for a tool that would actually allow us to tell our buyers, this is what you can earn on these properties once you purchase them, right? So short-term rents are a big thing now. Everybody wants to make money off of Airbnb, VRBO, Vcasa, like Chris mentioned. Just in the United States alone, this is almost $100 million business or greater. It's growing every year. Actually, the numbers that you see there on the slide to the right, these are worldwide numbers and they're in the billions. So how can we take advantage of that? How can we take a piece of that pie, right? So we looked for a tool that will actually hone in on these values, on these revenues, and that's how we came up with our short-term rents expansion. So we're going to be using a tool that actually focuses on the bookings for Airbnb and VRBO. It's going to give us real-time information so that our borrowers can make a more informed decision. And not just our borrowers, but it's going to help us as well to ensure that this is a great loan to give them. Okay. Do you want to move over to the next slide?
Yes, I also want to add, Cecilia and Chris, if anyone has any questions, please feel free to ask them on the chat window. Our panelists will take their questions. So there'll be a chat window at the bottom. So if anyone has any questions, please feel free to ask them.
Thank you, Harish. So what we're bringing to the table is a new expansion to the DSCR products that we already have. So we have two products, one that we call Platinum and one that we call Smart Vest. So this is just an expansion to it. And what we're going to be doing is, instead of focusing on a rental analysis, which is the typical, it's a 1007, we're going to be focusing on an AirDNA report. AirDNA for Airbnb, right? So it's going to give us that real-time information that we need. It's something that we are going to provide as a lender. It's going to be our service to our brokers, to our borrowers, and we're going to let them know for this area, what is the marketability for this property? Are you going to be able to rent it out for a good amount? Are you going to be able to make your money back and make these mortgage payments? So this is an AirDNA report that we'll be focusing on instead of the 1007. You're still going to be able to have access to all of the same requirements or loan criteria that we've got. You'll see there your loan amounts are still going to be high, the jumbo range of 2 million. Scores are not too high. What we're looking for is a minimum of a 660. And we do work with our borrowers if they need to improve their credit scores a little bit to get a higher LTV or a lower down payment. We're looking for usually about 20% down. That's the minimum if you want to use short-term rents. Now, we do have a smaller minimum down payment of 15% for long-term rents, but specifically for AirDNA short-term rents, we're looking for 20%. And the DSCR values are going to be the same as what you're used to. 1.0 being the typical, and we can still go to below 1.0 to a 0.8 if you put 30% down on that property. So all of that stuff is not going to change. Still going to be eligible for the typical properties that we close, SFR, multi-units up to 4. As long as we stay residential, you're going to be able to do a variety of condos, whether it's warrantable, non-warrantable, or even condotels. Okay. So this new expansion is going to cover everything that we already provide. It's just going to give the borrower a little bit more to work with. So how is this AirDNA report going to help us? What does it look like? We'll see that on the next slide. So the AirDNA report is going to give us 3 pieces of information that are crucial to us getting that decision on whether or not we want to move forward with that short-term rents. So the first thing that we're looking at is the market score. We want to make sure that it's in a good area where Airbnb and VRBO does thrive, and that we know that, yes, it is going to earn money here. It's not just a suburb, right? It is a place where people want to go, where people want to rent. Maybe there's amenities, lakes, and things like that nearby where they want to go. So that score is something that we're looking for to be 60 or greater. The other thing that we're looking at is the occupancy factor, right? We want to know how long out of the year is this property actually going to be rented, right? Is it going to be every other week, every other month, only half the year? So for that, we're looking for at least about 50% of the time for it to be rented out. That's one of our criteria there. And then the other piece, which is the most important piece for your loan, is the projected revenue. This is a yearly figure that we're looking at. We'll take that amount divided by 12, and that'll give us our monthly income. So these three pieces are going to allow us immediately to decide, yes, this is the route to take for this buyer, or we're going to have to go the traditional route, which is long-term rents. Either one is eligible on our DSCR products. However, we know that using AirDNA is going to allow your borrower to meet a higher DSCR value. It's going to impact their profitability so much more. Go to the next slide.
All right, Harish, did you want to take a second and go back and show the ARIVE?
Yeah, I mean, so we can do that. And looks like somehow chat is turned off. I think we are getting Q&A in a different channel. We'll try to see how to get to that. But first of all, I want to congratulate Tony and the Newrez team for innovating with this product. As you guys rightly said, there's a huge opportunity for real estate investors who are looking to buy rental properties and do short-term rentals, and incorporating AirDNA, which is, by the way, a commercial service. AirDNA collects what are the market rents, and we talked about some scores. So Newrez has taken the lead and actually introduced this to the broker community. So we think this would be phenomenal, and I'm sure others will follow given your leadership. So from an ARIVE perspective, those who are using ARIVE, you can actually, if you have a scenario where somebody's trying to buy a rental property and then they want to use short-term rentals, like either put this on Airbnb or VRBO. So there's a way you can put the scenario in, and the system will actually show you what products are qualifying at what rate. And then, you can pick either interest only or, regular. So I think, so this is already available in ARIVE. This is a brand new product. I think this was launched a couple of weeks ago. So if you guys are on ARIVE, you can take advantage of this opportunity and offer this to your borrowers. So in the pricing engine, this is the screen I'm sharing on the left. You have to pick non-QM. So the mortgage type has to be non-QM. The occupancy has to be investment. And then the income documentation has to be DSCR. And then you can put the ratio. It could be more than one, even less than one might, you may see some hits or some qualification. And this is a brand new checkbox. So typically it is long-term rental, but if you guys want to use short-term rental, you check this. Then the system is going to run pricing and eligibility for those programs which qualify for this scenario. So if you want to show this in action, so this is my ARIVE form. So I'm going to zoom this out. So I put just a standard scenario. Those who have used ARIVE, this should be pretty familiar. So here is my scenario. As I mentioned, instead of conventional, I go non-QM. I pick investment. So this is not really a jumbo loan, but still, still a good amount of loan amount. And then on the documentation type, you have to select DSCR. Once you pick DSCR, it will ask you for ratio. So I'm going to put a little high ratio. And then this is the key. I have to check this box. It'll be a short-term rental. And then when I run price, now it's going to go and search all the investors, all that. So you see it is going to bring up these SmartWest programs that Chris was talking about. So you see the rate. This is a test environment. And this is where you can see the adjustment which is applied, because this is a short-term rental. So this is again based on the guidelines and LLPAs. And you can start using this right away. These products are live. If you have a scenario which kind of fits this criteria, you can use all these programs. If I change my ratios, let's say to 1.0. Again, the system is going to change the pricing. But you still have access to this entire suite of programs. There are ARM products. I talked about interest only, so the initial payment will be less for your clients if that's something what kind of meets their needs. But what we are excited to have this launched almost within a few days of this going live with Newrez. And again, our teams are available if you guys need more information. We do Ask Arrive sessions every week, 3 times a week. So you're welcome to join one of these live hands-on training where our product experts can walk you through how to take advantage of this. With this, I'll give back to Tony yourself.
I just want to add that I know this is why you have a lot of partners out there using ARIVE, because your ability to quickly adapt and put in changes at the spur of the moment, like you're able to do for short-term rental product here. So kudos to you and your team, Harish.
No, thank you. Thank you again.
Harish, we have a few questions. I didn't know if we wanted to address those about this product before we move on. They are in the Q&A. Maybe Cecilia can help us tackle those. But one of them is, can you still do it if the market score is below 60%? Can you still do it if the occupancy is less than 50? I think they're wanting to know, is there exceptions to these rules?
Mm-hmm. So we don't actually make exceptions. We just rolled out the product, so it does have to meet that market or occupancy score. However, in the case that it doesn't meet, then we would default to using a traditional 1007 rental analysis.
Okay. And then another question is,
pull up the Q&A.
Thank you. Can you offer this to foreign nationals, and can you offer this to a first-time investor?
So first-time investors are eligible. They just need 25% down. That's the typical for them. And they do have to meet a little bit higher DSCR of a 1.15. Foreign nationals, however, are eligible for long-term rents only using a 1007, the traditional 1007. And I see another question there. Will we use 100% of the AirDNA comp and value? Yes, we will use 100%, the same way that we use 100% of the rents on a 1007 rental analysis. We don't trim it for vacancy factors, so we will be using 100% of that value.
And if AirDNA income is high, do you go above 2 million? Is there a limit to how much you will lend?
Right now, our maximum loan amount for DSCR is 2 million. Whether or not we'll increase it to 3 million, stay tuned for that. But for now, it is at 2 million.
Okay. And then I think the last one is just kind of a good question to ask. If they make enough to cover the house payment for the year, but it only rents for a portion of the year, let's say 4 months, is this not acceptable for the product?
If they make enough to cover the payment, but they don't have enough to...
Right. So I think the user might be saying, if they qualify with their income, but I think we want to clarify that this product is not necessarily income qualifying product.
Yes, they're referencing using income. So for DSCR product, we don't use any income for the borrower. There's no personal income, no employment, no business income either. The entire premise of a DSCR product is just to use the rent capacity on that subject property. So the case that we have that can help the borrower qualify, for example, our interest-only financing, things like that, that we use to help bring down the payment and meet the DSCR. But in the case that they didn't meet it and they wanted to use their income, we do have investment options available on our other non-QM products, like our bank statement product, our full doc product can also handle investment properties with as low as 15%. However, on those products, we use the traditional 1007 long-term rents. So the short-term rents is exclusive to the DSCR products.
Okay.
I think the bottom line key to that question, Cecilia, just to make sure we're answering the question directly, is we still need the occupancy score to be 50% or greater on the AirDNA report, correct?
Yes, we do. We need to meet the 50% occupancy and the 60 score for marketability.
Harish, I think you can go back one slide. I think it's the intro to...
Actually, yes. Is this correct? Yes. So Tony, do you
All
want
right,
to...
anything else to add, Chris, before we move on?
I don't think so. It's an exciting product. It's another opportunity for loan officers to grow their business, tap into a different pool of potential products with this. And so I appreciate Cecilia and all her work in getting this launched for us. So pass it over to you, Tony.
All right. Now we're going to talk about a few things here that is near and dear to my heart, especially because we worked hard on a couple different programs here. And if you want to go to the next slide for me, get a few more reasons of why we feel like our clients use us and continue to use us. And I'm going to ask Jacqueline, to step in here. And this isn't something that we rehearsed. I asked her to jump in where she's comfortable and add comments, but I just wanted to start out of what I really believe our strengths are and what are going to continue to be. Again, we went through a huge merger over the last couple of years. At the same time, the market is one of the most difficult in the modern mortgage banking history. And we have come out of that to a point where we're now ready to announce ourselves, if you will. We are somewhat of a new company when you figure that Newrez was made up of historical companies coming together and platforms, developing our own culture and ready to grow and show what we're capable of moving forward. But still, with that being said, of being a new company, one reason why I believe companies continue to use us is we're trusted advisors. We have a tenured sales force. In fact, our distributed, what we call our outside AEs in the local marketplace, are 8+ years on average. With I just sent out an email this morning of all the people on the sales side that have been with us 12 years or greater, and it's just phenomenal to see the reason and the loyalty that people stay with us year in and year out. But these, even our centralized AEs that fill in markets that are maybe gap markets or markets where it makes sense to cover on a centralized basis. Other than the new AEs that have really started with us recently, we're 5+ years in a centralized environment where you do see higher turnover. So we appreciate our AEs and our employees and do feel that's a strength of ours. Again, product innovation, I think we've shown that with the recent product we just talked about on the non-QM side. We'll continue to develop products there that make sense for us and for our client base and borrowers in general. Now, the next one, ease of process. I'm going to tease this a little bit without going into too much detail, but in mid-July, we've got a huge launch coming out on the improvement on and ability to submit loans through our Blueprint portal, even easier than it is today. It's one of the largest enhancements since the initial rollout of Blueprint, or I should say it's the largest enhancement since the original rollout of Blueprint a few years ago. Very excited about it. We do think this is going to improve your ability to submit a loan, whether you're a first-time user, a historical user. It's going to be something you're going to be able to do, and something we're going to be proud of for you to use and experience. To stand by for more of that coming out in July. And then I'm going to turn it over to you, Jacqueline, when we talk about community investment, because I know you're a pretty good sized VA producer in general, and being military friendly for a number of years and top VA lender is something we're very proud of. So I know if you wanted to add some comments here, Jacqueline.
Yes, and obviously I wanted to go back a little bit when it comes to your AEs, obviously Libby's the AE in our market, and she's phenomenal. Every time, whether it's at night, whether it's on the weekends, she's always available. She knows our guidelines. And I just think that that's huge, having somebody that supports us, that's going to be around to make sure that we close loans. I mean, at the end of the day, that's, what we want to do. So I think that you guys having, AEs that have been with the company for so long just shows how good your company is. So I just kind of wanted to bring that up as well. I've been using you guys for a long time. When it comes to if we really want to just talk about VA, you have an amazing VA support staff. I think it's VA support at Newrez.com. There's been so many times that I've needed somebody to look at an LES, or, we had questions on how much, grossing up, their BAH and their BAS income. And they, I've actually sent over appraisals, and they've been able to, review appraisals. They get back to you within a couple of hours. And it's just huge to have, a support team just for that type of loan. And I just think that has always just been a huge benefit for you guys as well.
Thanks for adding that comment, Jacqueline. And like all of our clients, we really appreciate our broker partners and strive to continue to do a good job for you every single day. Which, by the way, our AEs, we do want to be accessible, not just during the business hours. And please call your DVP, call me, email us, and we want to make sure we take care of you to the best of our ability.
I also wanted to bring up, I don't know if you kind of wanted to, I had a scenario kind of outside the box. That's another thing that, I could say a lot of great things about Newrez, but that's one thing that I'll say. You guys aren't black and white. You're very gray. Your underwriters, your VA underwriters are seasoned, and they really go above and beyond to make sure that the loan closes. You're not going to get a condition on there that says you need to restructure the loan. You can contact them, you can call the underwriters, you can go over, how can we make this work? I had a VA client that I guess forgot that he was married 7 years ago. And so we found out because his VA disability, he forgot to remove her as a beneficiary. So obviously at that point we had to pull credit, and luckily he had a good relationship with her. So we pulled credit, then found out that she had over $120,000 in student loans that she said, she was that they were going to be not waived, but she had a payment plan on those. And come to find out that didn't come through. Our DTI was super high. And so basically the underwriter called and said, hey, Jacqueline, I had a relationship with his ex at this point, and he was like, contact her, see if she's willing to, document that, her income, even though she's not going to be on the loan, we can review her income to see that. Just helps the underwriter to make a decision that, he's going to be able to make the payment. So I thought that was huge, that she was trying to go above and beyond to make the loan work, as opposed to just turning it down. And that's just one scenario of several that I've had in the 6+ years that I've worked with Newrez, that, you guys have gone above and beyond to make sure that we can close loans.
And we really appreciate that business, Jacqueline. Thank you very much.
Oh, you're welcome.
Going to move on to this slide. And again, I asked Jacqueline to step in here and comment where she's comfortable in doing so. But real quickly, again, we feel like a big strength of ours is a servicing powerhouse. And that is important because we retain your client, your borrower. We're not selling that, or we strive to not sell your borrower to somebody else that in return is going to solicit that client. And I mentioned earlier in the webinar of, some of what's going on right now with people pricing out to future value. Without future value is the ability to come in and churn that client, creating more revenue at a later period of time. And while I know right now the market, is such where most LOs right now are transactional, worried about the loan at hand, something to consider, on that particular transaction is forward looking. And the borrower that you're bringing in that you want to maintain over the lifetime, lifetime relationship, so you can improve that borrower situation again down the road. That is something that we believe we have one of the best programs out there right now, which is Res Club. If you want to go on to the next slide for me. So Res Club, we recognize borrowers, our brokers, for really giving us good quality loans where we're able to save cost on, that we can pass some of that cost back, to you, providing cost savings value. And the way Res Club works, it is a points that you accumulate over a quarter. It is qualifying over a quarter. And, we'll start out by just, once you qualify, some of the benefits there. You do receive a EPO waiver if you're in just Res Club General, 1 per 6 months. We do provide trophies, which we love to come by your office, the account executives, the DVPs, even myself, to get in your office and hand out and say thank you, for saving us money, and here's something that we like to recognize for that. And then Res Club Elite, there are higher points accumulated, again, based on lock pull through. We'll cover that in a second. Touches per file, and EPO, again, savings there for us by paying your EPO or participating in taking care of that part of the business. If you want to go on to the next slide for me. So this is how you qualify. Again, quality based on lock pull through. The more of your locks that you pull through, the more savings we have. Average touch per file. The smoother the loan goes through, the quicker it goes through, the more benefit it is to us from a cost perspective. We do need some minimum loans there in order to measure that quality. And as I talked about before, EPOs. And just, I know probably most people understand how this works, but just in case you don't, and there is some understanding there from a servicing perspective of why us maintaining that client through you bringing that client back to us is so important. There is, when you originate a loan, the lender, ourselves, if it's the broker transaction, we sell that business while we retain the servicing. I'll talk a little bit about that in a second. We still sell that loan either in a securitization, if it's a smart loan, if it's a government loan through, Ginnie securitizations, and then if it's a conventional loan, Fannie, Freddie. So we sell that loan up front. What you may not know is there's a cash transaction to buy that servicing right after you sell that loan. That's where additional expense comes in. We pay to service that loan and then to maintain that. The larger the servicing pool, the more efficient you become, and the more income you can make off of that over a period of time. It is usually at least 2 years of maintaining that borrower on your books before you're able to break even by buying that servicing right. So it's not just selling it and making the money off the transaction. We put up cash to buy that servicing right, and then over a period of time, make that cash back with the transaction. That's why you've seen some of the changing in the environment over the last couple of years, because as clients churn those borrowers, not only does it catch the eye, of some of the agents possibly, but there's a loss there, a true loss from a servicing perspective. And that's why the more business that you can bring that back through us, the better it is for us as a lender. And then again, savings there that we can pass back to you, which in this case, you bring a client back to us, you save an eighth in price for your borrower. We pass that back for you bringing it back to us. All right, let me know.
And Tony,
if
can
there's
I
any
add
questions
something on the qualification, just to be clear? This is qualification based on a broker company, right? So not an individual loan officer. So if there's, 10 loan officers with a company, right, you could have just a couple of them submitting loans and, getting the quantity and quality metrics measured, but all the loan officers are technically in Res Club.
Very good point, Chris. Thanks for adding that. But again, I want to add, most of our competition out there is selling the MSR to another servicer, in some case, maybe even us. But when they sell that borrower, again, the servicer at that time frame spends money on that MSR to accumulate it. So they're going to want to maintain that client. So even though you may be selling it to somebody that says they're not going to solicit your client, if they're selling the MSR, the person buying that MSR is most likely soliciting to keep that customer on the books. And unlike the period maybe we went through pre-COVID or during COVID, it's not a normal secondary market transaction today for there not to be a period of no solicitation for a year or two like there was at one time. There just isn't the money out there once you buy that MSR to see your portfolio churn away. So it's not common in today's secondary market for there to be protection from the servicer buying, your borrower at that point in time. So that's where we feel
I was
we
going
add
to say
value.
something on that as well.
Please do.
I was just going to say, as a loan officer, I mean, we're supposed to have our own CRM. We're supposed to obviously follow up with our clients. But this is just an added benefit for us that we know that, let's say we didn't solicit our client and they come to you and they pulled their credit to look at purchasing another house, or they, pulling a payoff for a refinance. You guys will send those back to us. And I think that's huge. Plus all your marketing and everything not marketing, but all your statements and everything that goes out shows us as the individual loan officer, and your team will actually make sure when they call to say, hey, I see that you worked with Jacqueline Richards before, are you okay to go back with her? I mean, hopefully they would say yes. But I just think those are just a huge benefit for us as loan officers to have a partner that cares about getting us, repeat business.
And thanks for pointing that out. And what Jacqueline is talking about is a slide that you're seeing right now. So when you send us a loan and you're in Res Club, your company's name, you as the LO, and your contact information goes on the digital mortgage statement if they're signed up to receive digital statements, or if they're old school mail out, your name and company's name and information is on that mortgage statement, where it's right there in front of the borrower at all times. Also, even more importantly, is on our servicing portal. Again, we retain the servicing. Your customer, your borrower logs into our servicing portal. Right there in front of them when they log in is your company name, the loan officer name, and the LO contact information, so that the borrower sees that information right up front and will hopefully at that point give you a call with interest to refinance. Once again, you're in Res Club, you're in protected account status. Okay, next slide. And look, I'm just going to close out that we want to continue to be an innovator. We feel like we're just now hitting our stride as an organization. We just rolled out closed-end seconds within the last couple of weeks. Please reach out if you have any questions there, or ask your AE. Hopefully we've seen the information we've sent out on that. And I'm just going to tease again, a lot of technical advancements coming out from Newrez this year. So we want to continue to be a player and to grow our market share responsibly and do what's best for the borrower as well.
And I'll just say one more thing as a loan officer. If you have not used Newrez, you need to reach out, because they have amazing products. Like I said, their AEs are great. Their company's great. It's just, definitely give them a shot. You'll be happy that you did.
Appreciate that, Jacqueline. Appreciate you having us too, Harish, Amy, and team. We love what you guys do for us and for the community, and we love being a partner of yours.
Yes, same here. Thank you to Newrez team. Thank you, Tony, Chris, Cecilia, Jacqueline, for coming up. Amy, are there any questions at this point? I'm not able to see them. Are there any questions?
Yeah, just a lot of people wanting copies of this. They want to replay. They want to be able to watch it if they missed any part of it. So we will be sending this out, the replay, in our newsletter to all of our ARIVE community. We'll also be posting this on our YouTube channel. If you haven't subscribed, go there. And we'll also make a copy available to the Newrez team. So yes, we'll be getting this out in many ways, so you can take part. I don't really see any other questions though. I think they've done a really good job of addressing everything here today. So thank you so much.
Yeah, so I think, and to Jacqueline's point, if you want to sign up with them, the link to contact Newrez is over here. Simple newrez.com/contact us. So hopefully you guys will take advantage of all the product innovation, technology innovation this Newrez team is doing. So since we have a few minutes, maybe one question, Tony, Chris, or anyone want to take up. So we know this short-term rental market is booming. How do brokers find leads? Do you have any suggestions? Like, how do they get access to these real estate investors? Any thoughts where they can, our customers can find them?
Yeah, I mean, certainly real estate agent partners are a big part of that, right? Because real estate agent partners, definitely. There's some that will focus on the short-term rental market. If you're in one of these communities that has a lot of short-term rentals, I think in one of the earlier slides there was a reference to San Diego and Miami, but you don't have to be in San Diego or Miami to have lots of short-term rentals. I live in Phoenix right now. I think it's like 110 degrees in Phoenix, and guess what? A lot of people go up. We've got mountains in Arizona, which with much cooler temperature. And there's some smaller towns and communities here, and I think every state and every area has those sort of opportunities. So real estate agents in those markets where short-term rentals are prevalent, a lot of people that have short-term rentals or investors that have short-term rentals also use management companies. So management companies are another great resource for tapping into that market.
So does Newrez team provide any marketing material? Like how should they approach these real estate agents? Like what should they talk about? What's the benefit? Any thoughts there? Like how can brokers kind of get more appointments and reach out to these agents?
Yeah, so we do provide, I don't know that we don't necessarily have scripts for them, but we do provide a lot of marketing materials. That's something we didn't even bring up. Maybe it's another topic for another ARIVE spotlight, but we do have
There you go. Yeah.
the marketplace by Newrez is our marketing platform that we offer to all of our approved clients. And so talk to your account executive. If you don't know who that is, it's newrezwholesale.com / contact us, and we'll be happy to connect you with somebody.
All right. Are there any other questions, Amy, if you see they've come in to take up, or we're
No,
almost at?
There's just a lot of excitement, to be honest. I think this is a much needed product. So there's a lot of good buzz out there. And I think that a lot of people will be rewatching this and sharing the news. So.
All right. So again, I want to thank the Newrez team for coming on this panel and educating all of us. Congratulations on launching this thought-leading product, and to ARIVE community, you guys can price this, select this, apply this to your loan file, do origination. So this is available to all of you. So we are looking forward to our community taking advantage of this. But thank you everyone for your time today. Happy Independence Day next week. Thank you.
Thank you.
Thanks, everybody.
Thank you.
Bye.
Bye.
Bye.